everyone, I am Mansi Rathod. I am a CA student and I am pursuing my articleship training from Shah and Company. Today I am going to present the presentation on tax audit report. I would like to thank my senior CA Shah for giving me such an opportunity to present such a presentation. Thank you so much, sir. Moving on to our PPT, I have included all the forms of tax audit which are mandatory obviously and the qualifications which we need to mention in Form 3CA and 3CB. There is the due date of tax audit report filing and the common mistakes which we make in our audit report. The governing rule 6G mentions the report of audit of accounts to be furnished under section 44A. This rule also mentions Form 3CA, 3CB and 3CD. What is 3CA? The persons who need to get audited their books of accounts under another law needs to file Form 3CA. The persons who need their books of accounts to get audited under the Law Income Tax Act 1961, they need to fill Form 3CB, and the Form 3CD is the particular, or rather I would say the details which we need to give about SSC. Moving on to Form 3CA. What are the necessities of Form 3CA? Main point over Form 3CA is the date of audit report. You must not make any mistake in date of audit report, also the UDIN and the qualifications. How would the qualifications look? You need to mention the qualification type, about what qualification it is and the observation of the auditor. There are many differences between Form 3CA and 3CB. See, Form 3CB needs the auditor to mention number of branches, which is very important. Let's see in the face of Form 3CB. Here we need to mention number of branches. It's important, and the observation as they were also mentioned in Form 3CA. Form 3CB is the report for which account it is, whether it is for profit and loss account or it is for income or expenditure account. The Form 3CB also says that you need to mention whether you are reporting for the purpose of profit of SSC or is it for loss of SSC, which is very important for the auditor to mention. And UDIN. UDIN has came into effect from 1st of January 2019 and is very important, or rather I would say mandatory concept in form or rather tax audit report. These are the qualifications which are important in nature and we need to disclose that preparation and presentation of financial statement is the responsibility of management, and it's important to disclose so that we are not in any liability. Next, cash payment more than 10,000. You need to disclose if the SSC has given any tax or rather has paid any amount more than 10,000 in cash. Next, you need to obtain a management certificate for the persons covered under section 269 SS and 269T, which we will deal later on. You need to give a declaration on your test checking, as auditor cannot perform 100% of checking and you need to disclose that. Also need a qualification on whether they have considered ICDS or accounting standards or Ind AS wherever applicable. Next important clause or rather important qualification which I would like to discuss is about GST reversal credit or GST credit reversal. See, there are two types of turnover. There are taxable turnover and exempted turnover. If you are availing credit then on your purchase, then you need to reverse the credit in the ratio of your taxable and exempted turnover, which is very important, and if the SSC does not do so, you need to qualify on the face of your audit report, which is a mandatory aspect. Next, for filing tax audit report is 30th of September of each assessment year. The main part of our session, Form 3CD. See, Form 3CD has two parts. First is Part A and second is Part B. Part A only includes about details of the SSC or basic details of SSC, what is the name of SSC, what is the address of SSC, PAN of SSC, and any indirect tax identification number. Now you might get question that why the indirect tax identification number. Direct tax also may have any identification number. You need to go to clause 3. PAN is already an identification number for direct taxation. Next, clause 5 status, whether the SSC is an individual, HUF, AJP, BOI, company or a partnership firm. Clause 6 and clause 7 mentions about the audit done of previous year or assessment year. See, you might see that here previous year is in the format of DDMFYY and assessment year is in the format of YYY. Why so? Both are previous year or assessment. You can also mention this in YYY. Why not? Because there are many businesses who commence in between any previous year. Right, so they would have a previous year less than 12 months. So for overcoming this situation, they have given a format of DDMM59. Clause 8. Clause 8, we need to mention that under which subsection or rather under which clause we are doing an audit of the SSC of section 44A. Clause 9. In case of association of persons and partnership firm, you need to mention the names of the partners, the profit sharing ratio of the partners and the address of the partners. If there are any changes to the above partners or there are any changes to profit sharing ratio, you need to mention in clause 9b. Moving on further to clause 10, you need to mention nature of business and which is a mandatory aspect. You need to mention the code and if you don't get any code of your business, you just need to write other trading activities. And if there are any changes to such nature of business, you need to mention under clause 10b. And also the clause 10b includes such option of whether you are adding any business, you are deducting any business or you are running two business together. That clause includes that. Clause 11a. Which books of accounts have been maintained by the SSC? You need to mention all the books of accounts that has been maintained by the SSC. Then clause 11b says that where the books of accounts have been maintained, what is the address of books of accounts of the SSC. The clause 11c is very important clause because we need to mention that which books of accounts have been audited by the auditor, which documents have been examined by the auditor. It may lead to the documentation essay. Moving on further to clause 12, if there are any income of which needs to be taxable under any presumptive taxation system, then you need to mention it in clause 12 and you would get a drop down menu of all the sections which you need to disclose. Clause 13, method of accounting. Which method or rather I would say which method of accounting is adopted by the SSC, you need to mention it. If there are any changes to such method of accounting, then you need to mention in yes or no. But if there are any changes and change persists or it affects the P&L, the profit and loss, then you need to mention its nature, increase in profit and decrease in profit. This clause is very important if there are any changes and there are changes in relation to profit and loss. Next, clause 13F ICDS. this ICDs would be discussed in detail in our next part. So keep tuned. If there are any qualifications of ICDs, then you need to mention in clause 13F. And if such qualification leads any difference in profit and loss account or leads to any increase on profit or decrease in profit, then you need to mention under clause 13E. See, there are space of increase in profit and decrease in profit. Under which ICDs there is a difference and what is the difference? Next, clause 14A, valuation of closing stock. See, valuation of closing stock, we normally write that closing stock is valued as cost or NRV, whichever is lower. But no, this is not the right way. You need to mention the method. What are the methods? Are they valued on FIFO or weighted average method? You need to mention it. Clause 15, capital asset converted to stock in trade. See, there are two situations. First situation, when capital asset is sold, then it will attract capital gains. Second situation, when capital asset is held as stock in trade, then it will attract income under PGBP, profit and gains from business and profession. In this case, what is it written in the Form 3CD is capital asset converted to stock in trade. What is sale now? Sale includes transfer, conversion. So what is ultimately this is capital asset converted, means it is sold. So this will attract income from capital gains. And the details of such income you need to mention it here in clause 15 of Form 3CD. Moving on to clause 16, which mentions section 28, which is the charging section of PGBP, profits and gains from business and profession, which says that some of the incomes are not of business, but they are deemed to be income from business and profession. Which are those incomes? The pro forma credits which we have got, the refund of any taxes, refund of any duties, or escalation claims that we have accepted, or capital receipt if any. All this would be included in section 28 and you need to mention all the details here in clause 16. Moving on further, clause 17, which says about section 43CA and 50C, says that if there is any sale of, or rather I would say transfer of land or building or both, then there would be a sale consideration, right? If the sale consideration is less than stamp duty value, then the deemed income would be the stamp duty value. This is the clause mentioned in section 43CA and 50C. Next, clause 18, depreciation, which is the most important point in our Form 3CD. What does it say? It says that depreciation to be charged as per block of asset system. See, there are blocks. Plant and machinery of 15%, plant and machinery of 40%, plant and machinery of 60%. You need to merge all your plant and machinery which comes under 15% and you need to write opening WDV and you need to write if there are any addition, the date of addition, and what is important here is you need to auto-calculate depreciation. Why? Because if there are any errors, you might not get the depreciation allowable. So, to be correct, to make our statement correct, you need to click on auto-calculate depreciation. Next, clause 19, amount admissible under sections. Which are those sections? Section 33AC, section 32AD. What is that? Investment allowance, where you are purchasing any plant and machinery more than 100 crore or less than the amendment has given more than 25 crore, you will get a 50% expenditure allowed in your profit and loss account. Next, 33AB. Tea, coffee and rubber, your investment in your tea, coffee and rubber, you would get an expenditure of amount that you have invested or 40% of your profit. Section 33 ABA says about site restoration fund, your investment made or 20% of your profit. So in the series of scientific research, you will get 100% deduction on your expenditure, and you need to just write or give description about the sections, and such will be included in clause 19. Clause 20A. When you need to pay a profit or dividend, but you have paid such amount in nature of rather I would say bonus or commission, which is not allowable under section 36(2), 36(1)(2). There is a case study of Dalal Broka Stock Broking versus Additional Commissioner of India, which says that they had a company where they had 3 partners, and 40 lakhs amounting rupees 40 lakhs they have shown in the commission, and the assessing officer had declined it and asked for any further details for such commission. Then it was held that such commission is not a commission, but it should be treated as dividend. They have just shown it for the taxability purpose to get less amount of income tax. Next clause, clause 20B, section 36(1)(5)(a). What does it say? It says that any contribution of employee towards any fund, you need to pay the amount, or rather this deduction would be, deduction would be available on the payment basis, and if you pay under the due date for payment of any fund is 15th of the next month, and if you don't pay, you would not be allowed such expenditure. But another clause, if you pay before filing your income tax return mentioned in the due dates under section 139(1), then you will be allowed such expenditure. Next, clause 21A, section 37. Section 37 says disallowance of expenditure which are in personal nature, capital nature, advertisement done by political party, and expenditure of clubs, subscription fees, etc. These basically are of personal nature, so this would be disallowed. Clause 21B, section 48. Normally this section talks that if there is no TDS, then no deduction of expenditure. Firstly, when there is any payment made to non-resident and you have not deducted TDS, then your 100% of the expenditure would be disallowed. If you have made any payment to a resident person, but you have not deducted TDS, then your 30% of the expenditure would be disallowed. Next, payment where equalization levy is implicated and you have not deducted any equalization levy, then such expenditure would be disallowed. Same in case of fringe benefit tax, wealth tax, royalty, license fee, service fee, etc. Next, if we have paid a salary to a resident and you have not deducted TDS, such salary expenditure would be disallowed. And if the employee's salary TDS is not been deducted and you are making a fund payment or contribution towards his firm, then such fund would also be disallowed. The expense of such fund would also be disallowed. Next, clause 21C, section 40B, section 40BA, inadmissible expense of income and remuneration. What is the limit for interest? The actual amount which is paid or which is written in the deed, or 12% of such amount. Next, remuneration. The actual remuneration which is paid or which is written in the deed, and the calculation which is given in section 40B and 40BA is, if there is book loss, then maximum you can give is 1,50,000. If there is book profit, then up to 3 lakh you can give 90%, and after 3 lakhs you can give 60%. Clause 21D, disallowance under section 40A3. As I mentioned in my qualification section, I mentioned that if you are making any payment in cash more than rupees 10,000, then such disclosure should be given, and such expense is also disallowed under section 40A3. Next, Clause 21E, disallowance for the payment of gratuity. As such, clause 21F is also the same 40A9, which says that if the gratuity is of the accrued from, then you might get deduction if you have not paid or has made payment on or before the due date of return filing, that is mentioned in the section 139(1). And in case of unapproved fund, you need to make payment of such fund before 31st of March of the previous year. This is very important clause, as you don't get time till your return filing. Moving on further to clause 21F, sorry, that has been discussed earlier, the same section applies. Clause 21G, any amount in contingent nature will be disallowed because that is your liability that has been incurred due to any offense. So such amount will be disallowed under this clause. Next, clause 22, the MSME Act. The MSME Act disallows some expenditure of interest, and with the calculation you have to disallow such interest. Clause 23, section 48(2)(b). Related party transaction, the main topic, the favorite topic in our Form 3CT. You need to mention your sister concerns, your related parties, which transaction you have occurred. The types of transaction are interest, salary, purchase, remuneration. Such all these should be included. Also, the repayment of loan should be included in our clause 23, so that we are not lacking for any disclosure. Next, clause 24, deemed profits and days on breach of section 32A and all. These sections we have discussed earlier in clause 19. There we have said that expenditure allowed, but what if lock-in period and the conditions have not been satisfied, and such expenditure allowed would be converted again into deemed income, and that we need to show under clause 24. Clause 25, section 41, deemed profit. Section 41 says that some of the payment which have earlier claimed as deduction or earlier claimed as expenditure, but on actual basis the SSG didn't make any payment, rather I would say on accrual basis of accounting. We just book our expenditure, right? And we don't make payment, we make payment after or any time. So sir, if you are not making payment, then such expenditure claim would be deemed income in the previous year. The next example of section 41 is deduction asset sold, but the asset sold in the consideration of asset sold is more than the WDV of the asset. So this will again create a deemed income. Then again, if you in any preceding previous year you have claimed any bad debt, and in the previous year you has any recovery, then such recovery would come under deemed profits under section 41. Next, clause 26, section 43B, deduction on payment till 139(1). Some of the payments are allowed only if they are paid, and such payments are mentioned under section 43B. They are like taxes, contribution, some interest, then leave encashment or any payment made to Indian Railways. Such payments only you can claim deduction only after you make any payment. Next, clause 27, prior period items. Any prior period items which you are considering in your previous year, you should mention all the details of such prior period items in clause 27. Clause 28, section 56 to 7A. See, if the SSE has received any property without consideration or with inadequate consideration, and if the fair market value of such property is more than ₹50,000, you need to disclose it here. And in case of SSE received any shares and the same limit fair market value more than 50,000, then you need to disclose in clause 29, which describes section 56 to 7p. Moving on further to clause 30, section 69d, it says about any amount borrowed on hundi, it cannot be paid other than account paycheck. If they have been paid other than account paycheck, then you need to mention all the details in the clause 30. Moving on further to clause 31a, section 269SS and section 269T, this would be included in our next video, and we will have a great discussion on these topics. Further, clause 32a, brought forward depreciation in idea. This point will link to your idea. You need to mention all the details for the brought forward losses or brought forward depreciation which were mentioned in your idea, and the same in the case of Form 3CD. From clause 32b, section 79, change in shareholding. In this, if there is any change in shareholding, then you cannot carry forward your speculation loss. Change in shareholding means if previously there is 51% of shareholding and he has 51% of voting right, the same must be continued. If it is not continued, then you cannot claim your speculation loss in the previous year. Clause 32, section 73, speculation loss. If there are any speculation loss, you just need to mention whether it is there or not, yes or no. And clause 32d, section 73a, which mentions that if there are any loss in your specified business under section 35ad, then you need to mention just yes or no and all the details. Next, clause 33, deductions. All the deductions which you are claiming in your income tax return, you need to mention it here with the amount which is admissible. Only the amount which is admissible. 34. If the SSC has to make any TDS compliance, you need to mention all the details in clause 34 ABC, where you need to mention that when the TDS return has been filed, on which amount of TDS has been deducted, and if there are any interest paid thereon, then you need to mention all such details in clause 34. Clause 35, quantitative details of stock in trade which you will get by your audit. Clause 36, section 115O. When you get any dividend from a domestic company, you need to mention it here. And if it's a domestic company and you are allowing dividend, then you need to mention